Imagine a world where you never have to worry about losing your wallet, finding the right change, or being hassled by counterfeiters. Picture a future where transactions are seamless, instant, and entirely digital. This isn't a sci-fi fantasy, it's the reality we're rapidly moving towards. Welcome to the era of cashless economies where physical currency is becoming a relic of the past. As we venture into this new, brave world, let's explore how the decline of cash is reshaping our financial landscape, the technology driving this transformation, and what it means for our daily lives. In a bustling market square of a quaint European town, a street performer taps his hat hoping for a few coins from passers-by. Nearby, a young woman fumbles through her purse for the exact change while a businessman swipes his card for a quick coffee. This scene, once commonplace, is becoming increasingly rare. With the rise of digital wallets, contactless payments, and mobile banking, physical currency is slowly slipping away from everyday use. As the shift accelerates, our relationship with money is changing profoundly. Join me as we dive into the world of cashless economies and explore the decline of physical currency. The rise of cashless payments. The shift towards cashless payments has been gradual but transformative, marked by several key developments over the past few decades. Initially, credit and debit cards introduced a new way to handle transactions, offering a convenient alternative to physical cash. These cards provide a secure and efficient method for consumers to make purchases without the need to carry large amounts of cash. The tech was revolutionary at the time, but it was just the beginning. With the advent of smartphones, the cashless revolution gained a significant boost. Digital wallets and payment apps such as Apple Pay, Google Wallet, and Samsung Pay emerged, allowing users to store payment information securely. These apps enabled consumers to make transactions with a simple tap or a scan, further simplifying the payment process. The rise of near-field communication technology played a crucial role in this transition, enabling contactless payments that are both fast and secure. In recent years, the integration of payment systems into everyday applications has accelerated the move towards a cashless society. Peer-to-peer payment platforms like Venmo, PayPal, and Cash App have made it easy for individuals to transfer money quickly and effortlessly. These platforms have become popular among younger generations who value the convenience and speed of digital transactions. The benefits of cashless payments extend beyond individual convenience. Businesses also reap rewards from reduced cash handling costs and increased operational efficiency. Cashless transactions eliminate the need for physical cash management, which can be labor-intensive and prone to errors. Retailers can streamline their operations by reducing cash registers, cash counts, and minimizing the risk of theft or loss. Countries around the world are embracing cashless payments at varying paces. In Sweden, for example, the adoption of cashless transactions is so widespread that some businesses no longer accept cash at all. The Swedish has actively promoted digital payments as part of its vision to become the world's first government cashless society. Other countries like China have seen rapid growth in mobile payments, with platforms like Alipay and WeChat Pay becoming integral in daily life. Despite these advancements, the tradition and transition to a cashless society is not without challenges. Issues such as digital literacy, access to tech, and financial inclusion must be addressed. As the shift continues, it will be essential to balance the convenience of cashless payments with considerations of accessibility and equity. Benefits of a cashless economy. The transition to a cashless economy offers numerous benefits, reshaping how we interact with money and conduct transactions. One of the most significant advantages is enhanced security. Digital transactions reduce the risk associated with carrying physical cash, such as theft and loss. With encrypted payment methods and fraud detection systems, digital payments provide levels of security that physical currency cannot match. Convenience is another compelling benefit of cashless payments. Digital transactions eliminate the need to carry cash or search for the right change. With just a tap of a card or a scan of a phone, payments can be completed swiftly. This convenience extends to online shopping, where digital payments streamline the purchasing process and reduce friction for consumers. The ability to make transactions from anywhere at any time has revolutionized the way we manage our finances and make purchases. Cashless payments also contribute to greater financial transparency and management. Every digital transaction is recorded, creating a clear and detailed financial history. This transparency helps consumers track their spending, manage budgets, and identify patterns in their financial behavior. For businesses, Digital records reduce the chances of accounting errors and simplify financial reporting. The ability to analyze transaction data provides valuable insights into customer behavior and business performance. Moreover, the efficiency of cashless transactions benefits both consumers and businesses. Transactions are processed quickly, reducing wait times at checkout and improving the overall customer experiences. Businesses can streamline their operations by minimizing cash handling and reducing the associated costs such as cash transport and security. The reduction in physical cash handling also decreases the risk of theft and fraud. Governments and financial institutions also stand to gain from a cashless economy. Digital payments facilitate easier tax collection and reduce the informal economy's size. With electronic records and transactions, governments can more accurately track economic activity and address certain issues like tax evasion. Financial institutions benefit from reduced costs related to cash management. While the benefits of a cashless economy are substantial, it's important to address potential challenges such as digital divides and privacy concerns to ensure the transition is equitable and secure for everyone. Challenges and concerns. Despite the many advantages of a cashless economy, several challenges and concerns must be addressed. One of the most pressing issues in the financial exclusion. Not everyone has access to the tech needed for cashless transactions. In rural areas or marginalized populations, the lack of access to smartphones or internet or banking services can create barriers to participation. Privacy is another significant concern. Digital transactions generate extensive data about individuals, spending habits, locations, and financial behaviors. This data can be valuable for businesses and governments, but also raises privacy issues. There is a risk of data breaches, unauthorized access, and misuse of personal info. Striking a balance between convenience and privacy is crucial as the financial system becomes increasingly digital. The reliance on technology introduces additional risks. Cyber attacks, technical glitches can disrupt digital payment systems, potentially leading to widespread financial disruptions. Security measures such as encryption and fraud detection are essential to protect against these threats. They must be continually updated to address evolving risks. Moreover, the transition to a cashless economy may exacerbate existing inequalities. People who are already economically disadvantaged or lacking digital literacy may face additional challenges in adapting the new payment methods. Ensuring that digital financial services are accessible and user-friendly is an essential part of working on this. The shift away from cash also has implications for financial privacy and autonomy. While cash transactions offer anonymity, digital payments leave a digital footprint that can be tracked and analyzed. The shift may lead to increased surveillance and a loss of personal financial privacy. Addressing these concerns requires careful consideration of data protection, regulations, and consumer rights. Overall, while the benefits of a cashless economy are significant, addressing these challenges is essential to ensure that the transition is inclusive, secure, and respects individuals' privacy. By proactively addressing these concerns, we can create a financial system that works for everyone. The global perspective. The move towards cashless economies varies widely, reflecting different stages of adoption and unique regional challenges. In some countries, the transition to cashless payments is well advanced, while others are still in the early stages. Sweden is often cited as a leading example of a cashless society. The country's high level of digital literacy, widespread smartphone use, and supportive government policies have contributed to the decline in cash transactions. In Stockholm, many businesses and public services no longer accept cash. Digital payments are ubiquitous. China represents another extreme in the global cashless landscape. The rapid adoption of mobile payment platforms like Alipay and WeChat Pay has transformed the daily transactions for millions of Chinese consumers. These platforms offer not just payment capabilities, but also integrated services such as loans, insurance, and investment opportunities. The widespread use of mobile payments in China highlights the potential for digital financial systems to integrate with other aspects of daily life. In contrast, other countries face different challenges in their move towards cashless economies. In India, for example, the government has promoted digital payments as part of its efforts to enhance financial inclusion and reduce corruption. Initiatives like the Digital India program and the introduction of the Unified Payments Interface have made significant strides in expanding access to digital financial services. However, challenges such as varying levels of digital literacy and infrastructure disparities remain. In many developing countries, cash remains a vital part of the economy. Due to limited access to tech and financial services, efforts to promote cashless payments in these regions often focus on overcoming infrastructural barriers and addressing issues related to financial inclusion. Mobile banking and fintech solutions are making inroads, but the transition to a fully cashless economy may certainly take more time. The global perspective on cashless economies underscores the diversity of experiences and approaches to this transformation. Each country's journey is influenced by its unique economic, technological, and cultural context. By examining these different experiences, we gain a deeper understanding of the challenges and opportunities. The future of physical currency. As we look to the future, the role of physical currency is likely to continue diminishing as digital payment methods become more prevalent. While cash is not expected to disappear entirely, its use in everyday transactions is projected to decrease significantly. Several factors are driving this trend, including technological advancements, changing consumer preferences, and the evolving financial landscape. One of the most significant developments is the rise of central bank digital currencies, CBDCs, that are digital forms of national currencies issued and regulated by central banks. They offer the potential to combine the benefits of digital payment with the stability and security of traditional currency. Many central banks are exploring or developing CBDCs as a way to enhance financial inclusion, improve payment efficiency, and address the decline in cash usage. Digital currencies could play a key role in the future of money by providing a secure, efficient, and universally accessible means of transaction. Unlike crypto, which operate on decentralized networks, CBDCs are designed to be a stable and regulated form of digital money. Their implementation could further accelerate the decline of physical currency and reshape the financial system. The continued development of financial tech is also influenced by the future of physical currency. Innovations such as blockchain, artificial intelligence, and biometric authentication are enhancing the security and convenience of digital payments. These technologies are likely to drive further adoption of cashless transactions and reduce reliance on physical money. However, the transition away from cash must be managed carefully to address potential concerns and challenges. Financial inclusion remains a critical issue, and efforts must be made to ensure that all individuals have access to digital financial services. Privacy concerns related to digital transactions also need to be addressed through robust data protection measures. In conclusion, while physical currency is likely to remain a part of the financial landscape for some time, its role in everyday transactions will continue to decline. The future of money is increasingly digital, driven by advancements in tech and changing consumer preferences. As we move towards the cashless future, it will be essential to balance the benefits of digital payments with considerations of accessibility, privacy, and security to create a financial system that serves the needs of all individuals. The decline of physical currency is a reflection of our evolving financial landscape, driven by technological advancements and changing consumer preferences. While the move towards a cashless economy presents numerous benefits such as increased security, convenience, and efficiency, it brings challenges, including privacy concerns and the risk of financial exclusion. As we navigate this, it's essential to strike a balance between embracing innovation and addressing accompanying issues. By understanding the dynamics of a cashless transaction and the impact on society, we can better prepare for a future where physical currency is a mere footnote in the history of money. In the end, whether you're swiping a card, tapping your phone, or simply carrying a bit of cash, the fundamental principles of financial transactions remain the same: trust, security, and the exchange of value. As we step into a cashless future, let's ensure these principles continue to guide our journey.